Markets crashing today. Benchmarks dragged lower by heavyweights like HDFC Bank, Reliance Industries, ICICI Bank. Traders also booking profits ahead of tonight's outcome of the US Fed meeting on interest rates. The sell-off began early in trade but gained momentum in the latter half of the day, resulting in nearly 2.3 trillion rupees being wiped out in investor wealth. The Sensex was down 800 points today, settling at 66,800, and the Nifty was down 232 points at about 19,900. Few gainers on the list: Power Grid, Coal India, ONGC, Asian Paints, Sun Pharma holding out there, but the major laggards today: HDFC Bank, JSW Steel, Reliance, BPCL and Ultratech Cement. Cuts were deep across the board. HDFC Bank clearly one of those today that was responsible for the knock in the stock markets. The counter had a gap down opening and fell more than 3.5%. The fall coming after the bank released financials of the merged entity for the first time, with a number of negative indicators. There has been a rise in bad debts, a fall in net interest margins, a fall in net worth, and operating ratios also are higher. Traders and investors were also spooked by a stock downgrade by Nomura and Kotak Institutional Equities.
Nomura has downgraded the stock. The target price has been slashed to 1,800. They fear four negative surprises from the recent con call. A sharp uptick in NPAs in the corporate loan book. They've highlighted higher cost to income due to accounting changes, NIM cuts of 25 basis points, net worth adjustments as well. Your thoughts on HDFC Bank currently, and what would your suggestion to investors be who've been waited with patience for a long time for this stock to now move?
So if you had patience with either HDFC Limited when it was there, or HDFC Bank, or HDFC AMC, or HDFC Life, I don't think you would have got disappointed, Sakshi. And it is a track record. And I love it when some foreigners come out with these kind of reports. It gives us an opportunity to, because, there is always a knee-jerk reaction in the market of such reports. So you get an opportunity to invest into these stocks at a decent valuation, because naturally, because of such reports, you will have pressure on the stock on that particular day or a following day. But let me just say this name HDFC Bank would have definitely found place in almost all chief investment officers, mutual fund large cap list. I don't think you will see HDFC Bank missing out from any of those things. Secondly, with the post-merger, there was a lot of expectation in the market. This will happen, that will happen. But, synergies take time to play out. So you need to give it time. We maintain our positive stance, and I think 1950 to 1980, that is 1,950 to 1,980. That is our target on HDFC Bank, and we remain optimistic about our view. And I think if you do get an opportunity because of this report of some softness or otherwise in the market, then please look at opportunities like this to invest in HDFC Bank from a long-term point of view.
Mileen, for you, what would be a good buying range for HDFC Bank?
See, currently we are seeing that HDFC Bank has started trading well below the 200-day moving average line with this gap down opening. But yes, it has got a good support at around, multiple support at around 1,500 levels. So if you get a chance to enter near, say, another 20-30 rupees lower, then it is an extraordinary good level to buy. I don't expect that 1,500 would be taken off. From there, you could see a good rebound towards, say, 1,600 levels. So one can keep a stop loss of 1,500 and play for the higher side. But if one has to enter here, another 20-30 points, you can look lower.